behalf of Women and Young Members Excellence Committee of ICI, welcome you all in the Sky High Symposium Series 57. Sky High Symposium is a Wednesday series of programs conducted by the Committee for Women and Young Members Excellence Committee. It is one of the Women and Young Members Excellence Committee's initiative to not only disseminate information to members on technical updation and non-technical skills, but also to empower and inspire them to come at forefront and realize their verbal skills at public forum. Today, we are going to cover two sessions. First session is on recent amendments in Companies Act 2013 and second session on trade receivables discounting, its advantages and operations. For our first session, we have CS Lavina Parikh, who is CS by profession and having 11 years of experience in the field and is also providing her services as certified CSR professional. Having qualified her CS in 2012, CS Lavina Parikh has worked with Ananya Finance for Inclusive Growth Private Limited from 2015 to 2023 and presently working with Nepra Resources Management Private Limited. She is having expertise in otherwise technically difficult fields like REVI regulations, SEBI LODR, and Companies Act 2013, compliance aspects of CSR projects, drafting and reviewing of agreements, regulations applicable to NBFCs and its compliances, and approach towards ESG and its impact over organization. Now, I request Ms. Lavina to start with her session.
Thank you so much, ma'am, for a brief introduction. It is really, grateful for me to present this session on recent amendments in Companies Act 2013. There seems to be some problem with my video. I'm not able to, start my video. I don't know what is the technical glitch. So I think I can continue this way only, if that is fine.
Yes, ma'am, no problem.
Yes,
you may please start.
Yeah. So I'll share my screen. Okay. Namaste, everyone. A warm welcome to all the participants who have joined for this program. So what we are covering in this presentation is recent amendments in Companies Act 2018. So my presentation basically covers all those amendments which are applicable post the financial year 2021. So all those amendments are being covered that are notified by the Ministry of Corporate Affairs. So we'll start. So these are the amendments that we'll cover under this presentation. That is corporate social responsibility, the definition clause of small company and listed company, acceptance of deposit rules, private placement, minimum offer period for right issue, abridged annual return, and the audit trail in accounting software. So the first one we'll take up is corporate social responsibility. So corporate social responsibility, I'll just clear out what is the definition of corporate social responsibility. So as per section 135 of the Companies Act 2013 and rules made thereunder, every company falling in any one of the below criteria will have to compulsory has the obligation of fulfilling the corporate social responsibility rules. So these criteria are if the company has net worth of more than or equal to rupees 500 crore, turnover greater than or equal to rupees 1000 crore, or net profit which is greater than or equal to rupees 5 crore during immediately preceding financial year. So any company, be it a private limited company or a public limited company or OPC or small company, any company which is following in any of the three criteria, any one of the three criteria will fall under the CSR rules. So the CSR obligation is typically if you're falling in any one of these criteria, the 2% of the average net profit of the last 3 years. So that will be your CSR obligation, which will be there. The net profit here means the profit which is calculated as per section 198 of the Companies Act 2013. So there is a calculation which is prescribed under section 198 through which you will have to calculate the average net profit for the last 3 preceding financial years, and 2% of that average net profit will be your CSR obligation. Now in the CSR, there are certain additional provisions that are inserted. So these provisions are the implementing agency. So the Act has defined what is the implementing agency, impact assessment, ongoing projects and unspent CSR, and CSR committee. So there have been changes and there have been additional provisions that are inserted in four criteria. So we'll go with them one by one. So first is the implementing agency. Now for any CSR project to be undertaken, there are two options available for any company. Like if you can do the CSR project, either the company can do it by themselves in the activities that are allowed as per the CSR rules, or they can do it through an implementing agency. So in this case, the Act has clearly defined what is the implementing agency. So implementing agency typically means any body that is established as Section 8 company or a registered public trust or a registered society that is exempted under Section 1023C or Section 12A or approved under Section 80G of Income Tax Act by central government or state government, or having exemption and having established track record of at least 3 years in undertaking similar activities. So if any body which is not established as a trust or a society, but it has a track record of at least 3 years to undertake such activities, that entity will also be deemed to be an implementing agency as per the Act, or any entity established under the Act of Parliament or state legislature. So previously there was no such rule that had defined the implementing agency, but now in this Act, the implementing agency is clearly defined. The obligations of implementing agency. So entity who intends to undertake any CSR activity shall register itself with central government by filing CSR1 with registrar. It shall be signed and submitted electronically by entity and verified by practicing CA, CS, CMA. On submission, a unique CSR number will be generated. So what it says that the implementing agency has certain obligations. Like previously, there was no such rule of filing CSR1 with MCA. Now the rule has come that every implementing agency has to file CSR1 with registrar, and that has to be certified by a practicing CA, CS or CMA, and a unique CSR number will be generated. So now the point is that if any company is, hiring any implementing agency, it is the responsibility of the company to check that whether the implementing agency has filed this form or not, because it is a compulsory requirement. So it is advisable that when any company is appointing any implementing agency to undertake their CSR project, they should check this requirement. They should typically ask for the CSR1 form, which the implementing agency might have filed. Then what is the responsibility of the company? The board shall satisfy, and CFO or finance head or manager shall certify that the funds have been utilized for the purpose and in manner as may be approved by the board. So the responsibility of the company lies in the fact that whatever amount is being decided by the board or whatever the obligation is there for the company for their CSR expenditure, the CFO or the finance head has to verify that the funds have been utilized for the purpose and in the manner as may be approved by the board. So the CFO has to typically put one certificate in the board meeting every time for the noting that the funds have been utilized for the purpose for the project or for the purpose for which it was approved by the board. So this, how the CFO or the finance head will certify, they will typically take a utilization certificate from the implementing agency or some proof from the implementing agency that if we have given you, suppose for example, 8 lakh rupees for your CSR expenditure, then how the 8 lakhs have been utilized, they can ask the proof from the implementing agency, basis which the CFO or the finance head or the manager can certify that the funds have been utilized, and the same can be placed in the board meeting also for the noting. Next is impact assessment. So impact assessment is very, interesting topic which the ministry has, clarified and they have introduced. So impact assessment typically means that whatever the CSR activity that we are doing, what is the impact that it has created on after doing that project in the society, what the impact has been created. Suppose, for example, if we are like a company is, interested in doing a women entrepreneurship program for low income women group. So if they are doing a CSR project of that kind, they will typically see after the project is completed that what the impact has been created after the project has been completed. So the Act has clearly defined what impact assessment means. So it says that every company which has average obligation of rupees 10 crore in 3 immediately preceding financial years shall undertake impact assessment of their CSR activities having outlay of rupees 1 crore or more, and not less than 1 year has been completed before undertaking the impact study. Now, impact assessment, there is a compulsion for the entities doing impact assessment, but that doesn't mean that only those entities can do. I have seen many entities who have voluntarily done this task of impact assessment, even though they don't have this high amount of obligation. So the act has clearly specified that if your average obligation in last 3 immediately preceding financial years, it is 10 crore or more, and in particular year you have a outlay of rupees 1 crore or more of a CSR expenditure, then the impact assessment is compulsory requirement. So there is an impact report which will also form part of your CSR report if you are falling under this criteria of impact assessment. And they have also defined what shall be the expenditure. So expenditure shall not exceed 2% of the CSR expenditure or rupees 50 lakhs, whichever is higher. So you will have to calculate that your impact assessment expenditure. So impact assessment expenditure typically will mean that suppose if a company, there are various consultants and companies who do the impact assessment on behalf of the implementing agencies. So if you are paying to those agencies any fees, or if those agencies are going out on the field to do the impact, calculate the impact, so that expenditure should not exceed 2% or rupees 50 lakhs, whichever is higher. Now, there's one important point here that impact study, at least 1 year should be completed before undertaking impact study. The reason for specifying this period is that otherwise, if there is not a long gap in between, the real impact you will not be able to understand what is the real impact. Suppose if I do a project today and after 3 months I go to the field to see whether there has been any impact or not, so that you will not be able to know the real picture of that. So at least there should be a long gap which should be there for you to undertake the impact study. So the act has defined that 1 year should be at least completed. So here for impact assessment, I'll give you an example is that suppose if there is a same example, if there's a women entrepreneurship program which a company is doing for low income women groups who are involved into small businesses, and suppose there is a implementing agency which is appointed by the company, that implementing agency is creating various modules on that, and they have the master trainers who are training those women on various aspects of business, like how to start your business, how to make a business plan, how to how to make those P&L and all, how you can use the social media to increase your business, how you can open the bank account and all those things. So these are the uh, stating the baseline data which they will collect, that whether those women they had the bank account before giving this training program, and after a period of 1 year they will go and see whether there has been a bank account has been opened after the training has been given, whether they are making the cash flows, balance sheet and all, doing it properly, whether they are using social media or not. So after 1 year, whether there has been increase in their income or not. So all those, there will be a baseline data collected and there will be a final data which will be collected after 1 year, based on which the impact can be presented. So that is how impact assessment plays a vital role. Next is ongoing project and unspent CSR. So the Act has now defined what is the meaning of ongoing project. So previously there was no such definition of ongoing project. So ongoing project is now the projects that are having timelines of not less than 3 years. So any project which is for more than 3 years, that will be termed as an ongoing project. Or those projects that were not initially approved as ongoing projects, but its duration is extended beyond a period of 1 year by the board on reasonable justification. Suppose if my company is involved into some long-term project. Long-term project means that suppose they are constructing a school. So for school construction, they will need the land, they will construct the school, they will find the resources. So it will take a long period of time. So suppose they want to do the project for a period of 3 years, more than 3 years or 3 years. So that will be termed as an ongoing project. Or suppose if the project, it was initially decided for a period of 1 year, but due to any exigencies or unforeseen circumstances, the company was not able to complete the project in a period of 1 year. So that got extended. So those projects are also termed as ongoing project. But for this extension, there has to be a noting in the board typically that previously it was not decided as an ongoing project, but its duration got extended by giving reasonable justification to the board. So there can be a noting in the board meeting, or if there is a CSR committee meeting, stating that the project was not an ongoing project when it was approved, but now its duration is extended by providing reasonable justification. Those can also be termed as ongoing project. Now, what is unspent CSR? So suppose if for a particular financial year, the amount which the company was required to spend under CSR, it was not spent. That is what is unspent CSR. So the Act has clearly defined the treatment of unspent CSR account. So suppose it was an ongoing project within 3 years and it transfer in unspent CSR account in any scheduled bank within 30 days from the end of financial year. Suppose you decide in this financial year 23-24, that my CSR obligation is rupees 10 lakhs. The project is for a period of 3 years. And if suppose by 31st March 2024, there will be major amount which will be left unspent. So that amount has to be transferred into any scheduled bank. A separate account, unspent CSR account, has to be opened. So this is an escrow account basically which has to be opened, and within 30 days that amount has to be transferred in the unspent CSR account, and that has to be utilized within the period of 3 years from that account. If the amount is not spent within the 3 years, even after 3 years that some amount is left in that bank account, then that amount has to be transferred in the funds that are specified in Schedule 7. What is Schedule 7 funds are Swachh Bharat Kosh, Clean Ganga Fund, Prime Minister National Relief Fund. So that has to be typically transferred to those funds. Now, what if there is unspent CSR amount for other than ongoing project? The project is not an ongoing project. It was for a yearly project, and still you were not able to spend that amount by 31st March 2024. Then such unspent amount within a period of 6 months. So by 30th September, you will have to transfer that amount in Schedule 7, fund specified in Schedule 7, like Swachh Bharat Kosh, Clean Ganga Fund, Prime Minister National Relief Fund, etc. Next is the CSR committee. So it is requirement of every company to have a CSR committee in place if they have any obligation under CSR. Now the Act has specifically put one provision saying that where the CSR expenditure does not exceed rupees 50 lakhs, the company need not have a CSR committee. So for a particular financial year, your obligation is not exceeding 50 lakhs. You are under 50 lakhs obligation. So you will not require to have a CSR committee in place. And the functions of the committee can be discharged by the board. Suppose for one financial year, your CSR obligation is 20 lakhs. You are not required to have a CSR committee. Another financial year, you have 30 lakhs. You are not required to have CSR committee. Third financial year, you have 50 lakhs. You are compulsory required to have 51 lakhs. If it is there, you're compulsory required to have a CSR committee. Then again, if your expenditure goes below 50 lakhs, but still the CSR committee, so once it is applicable, it is applicable. So then the CSR committee will have to be there in place. There are other requirements for CSR committee, like the name of the CSR committee should be mentioned on the website of the company, who are the part of the CSR committee and all those things. However, if the company has any unspent CSR amount, so what we discussed previously, that if there is any unspent CSR amount which is left as per section 135(6), it shall constitute a CSR committee even if the CSR expenditure does not exceed rupees 50 lakhs. So if your CSR expenditure is not exceeding rupees 50 lakhs, but you have some unspent amount in your CSR account, so even in that case, CSR committee will have to be compulsory constituted. So we discussed about the additional provisions that were introduced. Now, omitted provision. So Rule 3.2 mentioned that every company which ceases to be a company covered under Section 135(1) of the Act for 3 consecutive financial years shall not be required to comply with the CSR related provision. So previously there was this provision which stated that every company which ceases to be a company covered under Section 135(1). So long the first slide that we discussed about the applicability of corporate social responsibility, the criteria of net worth, turnover, and profit. So if you cease to be a company covered under Section 135 of the Act for 3 consecutive financial years. So for 3 consecutive financial years, if you are not falling into any one of the criteria, Suppose first year you are falling under the profit criteria, you followed the CSR provisions. For second, third, and fourth year, you were not falling into any of the three criteria. In the fifth year, you will cease to be following the provisions because for 3 consecutive years, you were not following in any of the criteria. This was the provisions which was previously there, but now that this rule has been omitted, MC has omitted this rule. The reason being they don't have to wait for 3 years to not able to follow the provisions. So suppose if this particular financial year I'm not following any of the criteria, I don't have to follow any provisions of CSR. But in the previous example, if you have to wait till 3 consecutive financial years, means in those financial years you will still have to, hold a CSR committee at least once in a year to take a noting in the board that there is no CSR amount which is there. But still you will have to follow the process. But now this rule has been omitted. So now it is not required for the company to wait for 3 consecutive financial years. We'll move on to the next amendment. So next is the definition clause, small company and listed company. So this is the definition of small company. So amendment to the definition of small company increased the maximum limit of paid up capital and turnover. The limits were increased so that more companies could be covered within the ambit of small company, making them eligible to get the benefits of small company provided under Companies Act 2013. So the act has basically changed the definition, the eligibility criteria for the small company. The reason is that small company, they enjoy many benefits because they don't have to hold a board meeting in every quarter. They can do it just half yearly, one board meeting. They don't have to follow the rotation of statutory auditors, the requirement which is there for 5 years. So because of all those relaxations that were there, this amendment was made in the paid up capital and turnover so that more companies can be involved and they can enjoy the benefits that were applicable to small company. Now, what is the comparison of the old and new definition? What is getting changed? So there are two criteria. We have the paid up share capital and turnover. So in the old definition criteria, the maximum paid up share capital was 2 crore and maximum turnover of rupees 20 crore. So there is and in between that, which means that both the criteria will have to be followed. So if you are falling in the paid up share capital criteria and turnover criteria, you will be defined as a small company. So if you have a paid up share capital of rupees 2 crore and like the maximum limit of 2 crore and turnover of maximum of rupees 20 crore. If you're falling in both these criteria, you will be termed as a small company. Now, what the new definition says? The new definition says that this 2 crore is now increased to 4 crores and turnover of 20 crore is now increased to 40 crore. So there has been an increase in the limit of paid up capital and turnover. That is what the change is there in the definition of small company. Listed company. So this is a very, I would say, a relaxing amendment under Companies Act. Listed company means a company whose securities are listed on the stock exchange. So there was this definition which stated that a listed company means a company whose securities. Now, securities definition, if you see as per Securities Contract Regulation Act, it includes shares, debentures, bonds. So there is a long list which is prescribed. Suppose if I am a company and if my debentures are listed, if I am a private limited company, but my debentures are listed on a private placement basis, still I'll be termed as a listed company because the definition said that whose securities are listed on stock exchange. So debenture is also a security as per Security Contract Regulation Act. But now there has been an amendment which has clearly specified the company which will not be considered as listed company. What are those companies? So public companies which have not listed their equity shares on a recognized stock exchange, but have listed their non-convertible debt securities issued on a private placement basis in terms of SEBI issue and listing of debt security regulation, or non-convertible redeemable preference shares issued on a private placement basis in terms of SEBI issue and listing of non-convertible redeemable preference shares regulations 2013. Or C, both categories of 1 and 2 above. So suppose if there's a public company which has listed just their debt securities on a private placement basis, they will not be termed as a listed company after this amendment. or if they have listed their redeemable, non-convertible, redeemable preference shares, or both. Second, private companies which have listed their non-convertible debt securities on a private placement basis on a recognized stock exchange in terms of SEBI issue and listing of debt securities regulations 2018. So that is what I was saying, that if there is a private limited company which have listed their NCDs on a private placement basis, so they will also not be termed as a listed company. Public companies which have not listed their equity shares on a recognized stock exchange, but whose equity shares are listed on stock exchange in the jurisdiction as specified in section 23(3) of the Companies Act 2013. Now, if there's a public company who have listed their equity shares, but it is not listed on a recognized stock exchange, means BSE or NSE, but it is listed on a stock exchange in the jurisdiction as specified. Jurisdiction means the jurisdiction in which the registered office of the company is situated. Suppose my registered office is in Ahmedabad. So Ahmedabad Stock Exchange will, if the public company has listed their equity shares in Ahmedabad Stock Exchange, those companies will also not be termed as a listed company. By issuing this amendment, MC has given relaxation to so many companies, because for listed companies, there are certain regulatory requirements, like they have to form certain committees, audit committee, nomination remuneration committee. So there were certain requirements for listed company like secretarial audit, which is compulsory for them to be done, appointment of independent director and all those things. So those will be exempted for them. So it is a very relaxing amendment which MCA has introduced. I'll move on to the next amendment. Next is acceptance of deposit rules. So there was a form which was introduced, form DPT3. So as per Rule 16A of the Company Acceptance of Deposits Rules 2014, every company other than the government company shall file an annual return of transactions considered as deposits and transaction considered as exempt category in Form DPT3 by 30th June of each financial year. The information contained therein shall be as on 31st March of that year. So this is an annual requirement which was introduced in the Form DPT3, which is the return of deposits. So any company which is accepting any kind of deposits has to file this return with MCA. So this form will typically include the deposits which the company have accepted and certain other transactions which are considered in the exempt category. So which are those transactions that are considered in exempt category? If the company has accepted any loan or financial institutions from any government bodies, local bodies, financial institutions, banks. So all those transactions will be considered in the exempt category. That has to be filed in Form DPT3 by 30th June of each financial year. This is typically an annual form. So the information for a particular financial year has to be filed by 30th June of each financial year. So as per MCA notification dated 29th August 2022, Form DPT3 shall be duly signed by the statutory auditor of the company. So this additional requirement which has been introduced by the MCA, where the statutory auditor has to certify the form. So previously what was there, that there were two categories. One is if you're filing return of deposits, and another was you're filing the transaction that are considered as an exempt category. So suppose whenever you're filing the return of deposits, there was a requirement to get a statutory auditor certificate, which has to be attached to this form. So these are the deposits that are accepted, and the statutory auditor used to certify that yes, the information provided is true and correct. So there was a statutory auditor certificate which was attached in the form. Now, instead of this, they have put the requirement that the statutory auditor will have to certify the form itself. So the statutory auditor certificate will certify the form while filing DPT3. So right now, this is the time when DPT3 is filed. So 30th June is the last day to file DPT3. So whenever you will fill the form, if you will select those transactions that are considered as exempt category, the requirement of statutory auditor certificate is not coming in that form. So there is no clarity from MCA that whether it is required only when the return of deposits has to be filed. So many practicing company secretaries and company secretaries are still awaiting that clarity, but the companies are filing the DPT3 form and going ahead without statutory auditor certifications in those cases where the transactions are considered as an exempt category. But if you're filing return of deposits, that field is getting activated in the form. So the statutory auditor is able to certify the form. But only when the transactions that are considered as exempt category is selected in form DPT3, that field will not getting activated. So this means though there is no specific clarification given by MCA, but it is deemed that in such cases, statutory auditor certificate or certification is not required. Now there are some exemptions that are available to file form DPT3. Those are banking company, non-banking financial company, housing finance company that are registered with National Housing Bank, and any other company as may be notified by the ministry from time to time. So banking company, NBFC and housing finance company typically because they accept deposits in their ordinary course of business. So it will not be, required for them because then the form will be huge because that is their ordinary course of business. That is why they are exempted to file form DPT3. I'll move on to the next. Next is private placement. So companies, prospectus and allotment of securities amendment rules 2022. A new proviso has been inserted in rule 14 and sub rule 1. So rule 14 was typically whenever there is an invitation to any individual or entity or a body corporate to subscribe for the shares in the company, you have to give them pass 4, which is offer or invitation, the offer letter. So pass 4 is the format which is prescribed by MCA in which you have to issue the offer letter to the prospective investor. So in that rule, there is a sub rule which has been added, which says that provided also that no offer or invitation of any securities under this rule shall be made to a body corporated, incorporated or a national of a country which shares a land border with India, unless such body corporate or the national, as the case may be, have obtained government approval under Foreign Exchange Management Rules 2019 and attach the same with the private placement offer cum application letter. So this rule says that suppose if you are issuing any offer letter to any body corporate or an individual that is sharing a land border with India. So land borders, they have specified countries sharing land borders: China, Bhutan, Nepal, Pakistan, Bangladesh, and Myanmar. Whenever these countries, if there is any individual or there is any body corporated to whom you are issuing this letter, the offer letter, there you cannot issue until and unless you get the approval, government approval under FEMA. And that letter, that approval has to be attached with the private placement offer cum application letter, which is PAS4. So this is a requirement which has been specified. So there might be a separate process which the company will have to follow with the RBI to take this approval under the FEMA rules, wherein they will get the approval and they will have to attach that approval with the private placement offer cum application letter. So this is the new provision that has been inserted in Rule 14 in sub Rule 1. Next is minimum offer period for right issue. So I'll give an understanding what is right issue. So right issue is typically when the company is issuing shares to any new investor. If there is any new investor is there wherein to whom the shares have to be issued, the company will give the right to the existing shareholders, a preemptive right basically, wherein the company will ask the existing investors whether they are interested to invest. Like they will give them the price at which the shares are going to be issued to the new investor, and they will ask if the existing shareholders have to maintain their existing shareholding in the company, and they also have to proportionately some shares have to be issued to them and they are ready to invest to maintain their shareholding in the company. They will ask the existing investors whether you are interested or not to invest. So this preemptive right is basically, it is always there in the shareholders agreement. Whenever the shareholders agreement is being defined between all the shareholders, you will typically see that this clause will always be there, which gives the right to the existing shareholders to invest before any new investor comes in. So this happens generally when there is a company who has a majority shareholding in some company and they want to maintain their stake. Suppose if that company is bringing some new investor, their majority shareholding will come down. So they will give them a right that we are issuing the shares to this investor, new investor at this X price. So whether you want to invest or not. So if they are okay, then they will also invest. So by that way, their shareholding will remain the same in the company. So this is what is the background of right issue. So the amendment is the offer period for a right issue. Under Section 62 of Companies Act 2013 was amended by the Company Share Capital and Debenture Rules 2014, dated February 11, 2021. So for a right issue, minimum offer period. So whenever there is a offer letter which is issued, the right uh, renunciation or acceptance letter is issued to existing shareholder, they have the timeline that minimum 15 days and maximum 30 days. So the company will have to wait till 15 days, and by 30 days is the maximum limit. Suppose after 30 days there is no reply, then it will be deemed that they don't want to, they have rejected the offer. So the minimum offer period was 15 days. So now through this amendment, the minimum time period for acceptance, it is they have bring it down to 7 days and maximum 30 days from the date of the offer. So between these timeline, any date, any days, number of days can be mentioned in that letter itself. So it has to be minimum 7 days. You can also write in the letter that we'll wait for 8 days, and if there is no reply, we will assume that you don't want to accept the offer. So the minimum time period has been reduced from 15 days to 7 days. This is typically because the company, it is easy for the company to do the process faster. They don't have to wait for a long period of time. That is where they have reduced this time period. I'll move on to the next point. So the next is abridged annual return. So for the annual filings for any company, there are two forms that are specified by MCA. One is Form AOC4, which is the audited financial statements which have to be filed in that form. And second is MGT7, which is the annual return. So annual return typically shows the information regarding the shares, the board meetings, the share capital of the company, and all those information. So all the companies were required to prepare its annual return in Form MGT7. The timeline is 60 days from the date of the board meeting, within 60 date of the accounts approval. So within 60 days, you have to file Form MGT7. But now MCA has specified that from financial year 2021, every company shall file its annual return in form number MGT7 except one-person company and small company. So previously Form MGT7 was for all the companies. So there was no bifurcation that for OPC or small company, there is a different set of form. But now the Act has specified that Form MGT7A, one-person company will have to file Form MGT7A, which is abridged annual return that has been specified. One-person company and small company shall file annual return from the financial year 2020-21 in form number MGT7A. So there are just minor changes in form MGT7A. There are some fields that have been deactivated. Like previously in MGT7, there was a column of holding company or subsidiary company. In MGT7A, they have changed it to an associate company or joint venture company. Basically, those information which may not be applicable to the small companies, that all things have been removed in Form MGT7. And it is an abridged annual return, means they have reduced the number of line items which are required to be provided. We'll move on to the next. So the last amendment is audit trail in accounting software. So this is the amendment which has been introduced, and it is, recently it has become effective. The Ministry of Corporate Affairs, by its notification dated March 24, 2021, and subsequent notification dated April 1, 2022, has made it mandatory for every company to fulfill the requirement of an audit trail feature in their accounting software from 1st April 2023. So basically, this is a new requirement which is being imposed on the companies, that all their accounting software which they are using, they should have a feature of audit trail. Audit trail feature is basically the all the information, it is phase of transactions, anyone can view. Suppose if you have put an entry in the software for any accounting entry, and then you have edited it, so that all features will, you can see that trail which is coming. So that the MCA has made it mandatory. The objective of MCA for mandating the requirement of an audit trail feature in accounting software, this is basically to mitigate the chances of fraudulent transactions or manipulation in the books of accounts of the company, and to bring in more transparency. So with audit trail, since all the the trail you can see in the transaction, it will avoid manipulation, the manipulation of fraudulent transaction. The chances are very less. So even if you have deleted any transaction, that will also be seen in the audit trail. So that will help in, from a risk management perspective, this has been introduced. With the help of audit trail, an auditor can trace every step of the financial data of a particular transaction right from the general ledger. A complete audit trail is the full record of events that occurred in the execution of transaction, with every phase of a transaction receiving a timestamp revealing seller, purchaser, time of sale, and location of the sale. The audit trail records key details about transactions and processes for review in the future. They can be simple or they can be the complex. That is all is the objective, that since all the record of the events can be seen, the chances of fraudulent transactions or manipulation in the books of accounts, it becomes minimum. And there is an additional responsibility which has been placed on the statutory auditor, that when they are preparing the audit report, they will also give their view and comments that such feature is present in the accounting software maintained by the company. So the auditor will have to typically certify that yes, there is this feature that is there in the accounting software maintained by the company, and they have to comment that in their audit report which they prepare. And this is applicable from 1st April 2023. So from this financial year, it is applicable. So thank you so much. Before I end this session, I just wanted to tell you that it is very important for us as a professionals to keep a track of all these amendments that has been introduced by MCA from time to time. So the only way to keep the track on these amendments, so you can subscribe to any of the educational websites that are available that have that amendment. So companies2013.com is the website where you can subscribe, or taxguru.com, or there are certain softwares that are used by the professionals in their day-to-day employment or practice. Like there are some compliance software that are there in the market. They can also help us to keep an update with all these amendments. So this is where our role becomes important in any organization, or even if you are practicing. So it is very important to keep a track on all these amendments. I hope the session was, it was quite detailed. I have tried to cover all the amendments. So thank you so much.
Thank you, ma'am. Absolutely. You explained the topic very much in detail with the intricate modalities and in a way that the participants can take maximum benefit of the same. So I think we can take the Q&A session now.
Yes, we can.
The participants are requested to share their questions in the Q&A section if they have any.
Meera, there was one question wherein they have asked, can I get this PPT presentation? So yes, I will share. You can give me the email ID. I can share the presentation. I'll also share my email ID and contact details in case anyone has any doubts. Even after this session, anytime they can get in touch.
Sure. As of now, we have not received any. Okay. We have one question. So, ma'am, one participant is asking if all the companies like amendments are discussed, they are applicable for which financial year?
So every amendment that I discussed, they are separately applicable for, they are notified, like some amendments, they are notified like immediately Some have been notified, like the last one which we discussed, audit trail. It was previously notified to be applicable from 1st April 2022, but then they again extended it to 1st April 2023. So it is different for each amendment. So they will have to go, maybe Google it and then they can search it, the amendment date.
And participant is requesting for the names of the websites you mentioned for keeping themselves updated. I think you
Sure.
mentioned text.
I'll share it. I'll share it. Yeah, taxguru.com. Some I'm mentioning the URL of some website, but some I don't remember the exact URL. So I'm sharing the name of the thing. They can Google it and get the link.
That's fine.
Yeah. And I'm really sorry for this video. I don't know what happened at the last moment. There was some technical glitch and I was not able to, put it on. I'm really sorry for that.
Your presentation and deliberation made up for it.
Yeah. Thank you. Thank you so much. So there's another question. CSR money of ongoing project to be transferred in government specified funds. Government is after 3 years, but generally they are. So if it is ongoing project, which is more than 3 years, has to be. Are there any questions? I think I've replied to all of them.
It just read out the question and answer for the benefit of all participants. So a participant is asking if CSR money of ongoing project is to be transferred in government specified funds after 3 years. But generally there are the projects are longer than 3 years. Please clarify. So ma'am has answered the question. It is, and it is in the chat box. It is in the answer section. So ma'am, was question in general I'm not more into area of companies at practice, but every once in a while when we interact with MCA website, it is not always a smooth experience. And
So you're talking about V3, right?
yeah.
So V3 is something like all the company secretaries and all the professionals, in fact, who are dealing with V3, they are all frustrated because the thing is that sometime it is working, sometime it is not working. So if you take my practical example, in the morning itself, I was trying to file this form DPT3 for my company. I'm trying it for a week. I'm not able to download the form. So there are help desks that has been notified by the ministry. So you have to call continuously on those help desks. I don't have the personal experience, but I have been in touch with various professionals. So they have been trying day long. They are not able to connect, sending emails to them also, but there has been no proper response. So it is just wait and watch. So you can just go to the MCA website. You can raise a complaint, raise a query. If you are lucky, you can get the answer. Otherwise, you will have to wait. So there have been some representations also to the MCA that you waive the fees till the time this portal is not working properly, because unnecessary it has been creating a problem for all the professionals. The companies also, like, even if you are into practice or you are into employment, it becomes very difficult for a professional to make them understand to the management that why this penalty has come, right? So the management will not understand. You will have to explain them that this V3 portal is not working and all those things. But there is a limitation for them to understand because not they are not dealing with that portal. So that is why there have been representations. Even ICSI has made a representation to MCA saying that you please waive the additional fees. But there has been no response. So if you're lucky, you will be able to file the form. If you're not lucky, you will have to wait. So there is no answer. Sorry for this.
So I wanted to understand, how do you tackle this sort of situations?
So
like, in your
practically
regular
for
course?
me, right now, I'm not facing that difficulties. Only for this DPT3, I'm facing this difficulty since a week. So I thought, let me just wait because 30th June is far. So only way out for this is what I suggest is don't wait for the last moment to file the forms. Just do it. Like the data available, start doing it immediately. Like whenever you have the data available, even if you have a time of 20 days, 25 days, don't wait for the end time. कि हाँ अभी तो time है, we'll do it afterwards. Don't do that because MCA is behaving like you don't expect how MCA will behave. So just try every day. You try. That is the thing I would suggest.
Thank you so much.
Yeah.
ICA Meera Shah take this opportunity to propose a formal vote of thanks to you, ma'am, on behalf of Women and Young Members Excellence Committee of ICI. We thank you for your intricate deliberations on the subject and sharing your valuable insights and sharing your valuable time on the recent amendments of the Companies Act 2013. I also thank Preeti Savla ma'am and Vice Chairperson CFH Hajar sir, and thank the participants. Thank you so much. I'd like to hand over to the next coordinator to take the session ahead.
Thank you so much. Thank you so much, everyone.
Thank you, ma'am.
Thank you.
Hi. Hello. Yeah, hi. This is CA Asha Gangar. And now moving on to our second session, I would like to introduce CA Priyanka Agarwal. So it's my pleasure to introduce you to ma'am. So Priyanka Agarwal, she has completed her BCom from Ranchi University, and she has passed her CA final in May 2006. She had worked with Big Four like Deloitte and KPMG, and had handled many statutory audit of listed companies. Since last 10 years, she has been working with Rashtriya Chemicals and Fertilizers Limited, which is PSU. It's a government undertaking, Mumbai, as a senior manager. And about her achievements, she has in February 23, she has been awarded as Best Women Employee Award in executive category, third place in the Forum of Women in Public Sector among all PSUs. So congratulations for it, ma'am. And talking about her family, she is married to CA Manish Kumar Agrawal, and they are blessed with two lovely kids of 11 years and 6 years. So without wasting much time, over to you, Priyanka ma'am. Thank you.
Thank you so much, Shasha. And that's a beautiful introduction. Thank you so much for inviting me as a speaker here. Good evening, everybody. It's a privilege to be here. So without going ahead more with the conversation, let's share a screen and go ahead with the PPT. So just let me know if you're able to see.
Yes, ma'am. Visible?
Yes, we can see that. Yeah.
Slideshow view.
Yeah.
Ma'am, click F5 to make it full screen.
Just a moment. Sorry. Mm. Actually, I'm sitting with somebody else PC, so let's.
You please click on the slideshow. That is cup-like shape in at the bottom, na? At the bottom.
Or alternatively, you can use Shift F5, so it will take you to slideshow. Just do Shift F5.
Just a moment.
Sorry to interrupt, ma'am. I suppose you're using a MacBook. You can click on the slideshow.
Am I audible?
Yes, ma'am.
Yes, you are.
Yeah. So welcome everybody. The topic is very light and I hope the evening is also very light. We have good breeze and we can start upon a simple topic, which is e-trades, advantages and operations. This is the most recent topic that I can see in today's world. Can I stop my video if it is okay?
Yes, ma'am, it will work.
Yeah, thank you. So what I wanted to tell you is, when we talk about e-trades, many questions comes to our mind. So the first question that I want to address is, e-trades is only applicable to the MSME vendors. Okay, so what is MSME vendors? So MSME, as we are all chartered accountants here, we are aware, much aware. So still I want to make it a point. MSME is a micro, small, medium enterprises who have been given this facility, who has been facilitated by RBI by giving this e-trades advantages. So what is trades? Trades is the trade receivables e-discounting system. That is, trades allows MSME suppliers to discount their bills and invoices. And what is e-trades? E-trades is an online platform for digitization of the entire bill discounting process and ensuring an element of fairness in trades. Whenever we talk about trade receivables, MSMEs are always being given advantages, including your MSME Act, which is already there since a long time. The MSME are still short of their working capitals and are not getting a proper channel to increase their increase their businesses, because the worst part in MSMEs transactions is that they're very much stuck with their working capital arrangements. So this RBI's step to get a platform is basically to help them with the working capital needs. So what is the purpose of this e-trades is, RBI has launched e-trades in 2018, but yet I can tell you in 2023, there are 6.3 million MSMEs which are yet not being registered on e-trades. So this can tell you the figures that how MSMEs are still neglected. RBI has launched it in 2018. They have decided to come out with trades for facilitating the financing of trade receivables for MSMEs from corporate entities and any other buyers as such. as on today's date, eTrades has still not made a mandatory for the buyers to purchase from MSMEs. Although it has been a facility given to MSMEs, but till the time it has not been made a compulsory thing, none of the corporate and buyers are much intended to go for it. I'll explain you in the later slides that how it goes. Basically, the Threads platform is a online platform between a buyer and a seller. Here, the buyer are the corporate entities or maybe any other person, and the sellers are basically MSMEs, because this is platform meant for MSMEs specially. So there is one more entity which is involved in this, that is called the financiers. So I also want to let this discuss why this MSME topics is coming for a chartered accountants discussion. Because number one, chartered accountants can also register themselves as MSME. Number two, they can register themselves as a financer as well. And there are much more avenues for us to learn and understand from a buyer's perspective as well. So this platform of Threads enables MSMEs to receive payments more quickly. For SMEs, which is a small medium enterprises, the platform has also reduced their annual interest payout. The Threads main purpose is to allow MSME sellers to discount their invoices raised against major corporations, which help them manage their working capital demands. Basically, here the creditworthiness of the MSMEs are not being checked. Here, the creditworthiness of the entities who is the buyer, who is the corporate entities, are being checked. So creditworthiness, rationale for discounting, for financing is on buyers now. So the whole idea is to unlock the powers of MSMEs. What is the background for Threads? So briefly, I have just summarized about the Threads. It was first presented to the central bank in 2014, and the 3 platforms have been granted this license. Basically, this Threads mechanism has come into picture in 2017, but even in 2017, there was none of the MSMEs registered with them. It has really taken up some pace in 2020 itself. But as of now, also, as I mentioned earlier, we have most of the, I could say 80% of the MSMEs are still not on Threads till now. So this Threads mechanism is involving a financer, is involving a buyer, is involving a seller. But to execute this Threads, we have also the platform on which this buying and selling has to happen. The platform is a license which has to be granted by RBI only. Only Reserve Bank of India has power to give this license. So as of now, this 3 platforms has been granted the license to operate on the Threads mechanism. Till now also, since 2017 till 2023, even after so many years of this mechanism, we still have only 3 platforms in picture. So the first platform is the venture, which is between NSE and Small Industry Development Bank, which is SIDBI. This first platform is known as RXIL. This is a venture between the 2 corporations. Number second, the next one is Axis Bank. Axis Bank is also a platform for the Threads, and they operate with the name of InvoiceMart. Third is the Mayan Solutions, which runs their name as M1 Exchange Limited. So major jargons that, as I spoke earlier also, the major jargons of Threads, which is although a age-old topic since 2017, but still now I would say many people are unaware of the jargons used in trades. So vendor, buyer, financer is a very small things we all know by name also, but there is something called factoring unit. So what is the factoring unit? It is the invoice. What is the bill or the invoice which is going to be actually discounted at the time of trades settlements is called the factoring units. So factoring units are the invoice or the bills on the system consented for the bidding. So there is a consenting process in this. Means not only that there is a buyer and a seller, the buyer should be agreed and the seller should be agreed to get this bill discounted. It's a platform wherein the both buyer, seller and financer has to register. Vendor basically is an MSME. Buyer can be anything, corporate, government, PSUs or whoever. And financiers is the one who will register with them. It will be banks and NBFCs. So now factoring unit is supposed to be accepted by all the three persons. Has it been vendor who is not accepting to have the factoring unit invoice to be discounted, it will not be able to discount it on the platform. So the next slide is, what is our criteria for operating at trades? This is little critical. Like operating at trades, I mean, the persons who can registered as trades. So in trades, you can register as a financer, you can register as a seller, or you can register as a buyer. But for registering itself, a company can register as a platform as well. So how you are registering as trades platform, the criteria is being very summarized here. Am I audible? My internet is showing as unstable.
Audible, ma'am.
Okay. So to register yourself as a platform for trades, there are certain requirements. The first is a budgetary requirements. The trades should have a minimum paid up equity capital to the tune of 25 crores, because it will not be authorized to take on any credit risk. The platform itself is to be strong enough to do this activity, this whole scenario which RBI has placed for discounting of bills. The platform itself should have been good enough to take the credits. The foreign ownership of the trades, like there are platforms which has been owned by the foreign companies, will be governed by the current foreign investment policies. Now, third point is for budgetary requirements, entities that are other than the promoters, they cannot owe more than 10% of the trades equity capital. This particular reason is because there are companies who are having their equity capitals not within the entities. There are promoters. There are promoters who are not holding the equity capital, rather than it will be managed and governed by some other entities. So to avoid that and to make it more secure platform, RBI has given these kind of directions. So before being on trades platform, there has to be a digital due diligence to be done of the companies. So organizations and their promoters must be fit and suitable to serve as trade. This has been defined by SEBI with regard to the capital and disclosure requirement regulations. The RBI will judge the applicant's fit and appropriate status based on their previous track record of sound credentials and integrity, as well as their financial soundness, and the track record of at least 5 years will be checked. So their continuity plan is being checked here. RBI want to check whether the persons who was getting the license are actually being able to survive. So their continuity plan, along with their 5 years record of their businesses, are being checked. Other regulators and enforcements and investigative agencies like Income Tax Department, CBI, Enforcement Directorate, and the SEBI Securities and Exchange Board may also request some feedbacks from the candidates before granting them any license. Other than the budgetary requirement and the due diligence which is being checked, the capability of the platform is also very much important. The capability per se, the threads when we talk is a whole new technology driven platform. So the strong technology base, which is a support of IT, which is a support of the latest technologies, are very much appreciated and checked. So the operations, operationally, it has to give platform for all the participants. Say like M1 solutions. I can just give you a small brief about it. M1 my end solutions, which is called as M Exchange. This entity used to visit all the companies which has not yet been registered, and individually the company's board and company's management is being approached to. I wouldn't say that it is only M1 Exchange which is doing this. Even RXIL, even InvoiceMart are also taking the market survey, and they are also approaching to each and every company. But for this capabilities of technology has to be so diversified, has to be so flexible that each and individual company who is having a different operations which relates to their accounts, which relates to the acceptability, which relates to the confidentiality, this companies has to give them that comfort. They have to check it thoroughly in their own respect, that none of the companies will have difficulty for their confidentiality approach or for their day-to-day management of the operations. So this point, which is called capability of the technology, it is very, very important for a platform, for a company to be registered as a TRED platform. So for proper business continuity, this is disaster recovery plan, sites, then online surveillance capacities, monitors, their volumes in the real-time prevent system. All these things are thoroughly been checked before getting registered for TREDs. By this criteria itself, which is like little complicated and huge, you can understand that why since 2017 only 3 companies had registered for the TREDs platform. So how does this TREDs work? Basically, we understand it as a simple process. Like there will be a platform and the company just has to get the discounted of the bills. But it is not really that simple. For TREDs platform, there is some kind of agreements which has been launched, which has been given by RBI in their proper supervision, that all the terms, conditions of the agreements should be suitable to MSME, along with being a secure transaction for them. And the buyer should also be secured with respect to the discounting system and not being affected with their daily transactions. So the first step for being in TREDs, all the 3 companies, the buyers who can be a corporate entities, and the seller who can only be an MSME, and the financiers, all the 3 has to register with the platforms. So the 3 companies, RXIL, M1 Exchange, and InvoiceMart, all the 3 companies are the platforms which are the licenses today, and all the registrars like buyer, seller, and financiers has to approach either all of three or any of three as per their convenience. Once financer, buyer and sellers are registered with threads, wherein these platforms are sometimes giving them a free approach also, so that they can start using it. And sometimes there has to be one registration fee and transaction fee for the platform. But for some tenure to promote this activity, all the three platforms has waived off their registration fee and the transactions fee. Now, after registration at the eThreads platform with the complying terms, conditions, and their agreements, there is a creation and uploading of bills and invoices on the portal. So there is a portal access with the IDs created on portal. MSMEs, vendors will get their own ID passwords. Then buyers will get their separate ID passwords, and financiers will get their separate ID passwords. By the first picture of this threads will come only when a MSME vendor will create a bill and upload the bill on the platform. So what I want to tell you here is, once the material has been sold by a MSME and the buyer has received the material at their place, this particular bill is generated by MSME. It has to be uploaded in the platform. Although this is happening with the many companies that they have their own system of uploading the bills and getting the pay, there are different software also to track the bills and all. But this particular threads is formed to safeguard the interest of MSME with the loss of days and settlement issues, and there are benefit of getting in-time payment. So once they create the bill and upload, there has to be an acceptance of this invoices by the buyer within a specified date. Say MSME vendor has uploaded the bill today in the system of threads, in the threads platform, and there is given 7 days time to the buyer to accept these invoices. Say buyer has a problem with the material, say buyer has not received the material, say buyer has other correspondence regarding the certificates, regarding the proper invoicing, regarding the quality, quantity, or any acceptance thing with the actual receipt of the material, the buyer will not accept these invoices in the system. Acceptance of invoices in the platform, in the trade system, can only happen when buyer is clear with all his doubts and has complete intention of paying the bill in full. There is nothing called partial acceptance of the bill as well. So before that specified date, buyer has to accept the bill in the trades platform. Then this intention, this acceptance will automatically go to the MSME vendor. Whoever has uploaded the bill, they will get a message on the platform and they will come to know that yes, my bills has been accepted by the buyer. Then MSME has to approach on the platform again, and they have to show their intention, their consent for discounting of these bills. Now these bills, once accepted, will be called as factoring unit. If it is intended and consented by the MSME vendors to discount it, the automatic message will go to all the financiers. Financiers, when see the bill in the system, that this is the, say for example, there is a transaction between a GAIL India Limited and a vendor, say ABC Limited. So ABC Limited has uploaded the bill and it has been accepted by GAIL because the material has cleared by them. Now, GAIL has to show his acceptance in the system. The message will go to ABC Limited. ABC Limited will show his intention to discount it as a factoring unit. The message will go to XYZ Limited, who could be a financer. So there could be many financiers who are already being registered with the platforms, and these financiers will see that this bill is related to GAIL, and GAIL being a big company is having a good credit worthiness, will discount, will accept that, will offer the acceptance of the vendor. Vendor has an intention to discount the bill, so financiers will give you the competitive rates. Some financer will say, I can discount your bill today with the rate of say 5%. The other financer can give them the offer of 4% as well. So once this bidding will be over, the financiers has given a bid of say 4% and vendor has accepted the bid, the bill discounted system is in place. Bill discounting system will come into place. Now, for discounting these bills, there will be some charges which is paid, which is like interest 4% or 5%, which I just mentioned. This charges has to be borne by vendor. Why this charges will be borne by vendor? Because vendor needs the money quickly. Say ABC Limited bill is due after 30 days. Okay, so GAIL Limited can pay them only on the 30th day. But financer will immediately transfer the money to ABC Limited with 4% of interest. So the financer has got a very quick working capital by paying only 4%. Here, why this red color I have mentioned, this bill discounted charges is never been borne by the buyer. For buyer, it is just the acceptance. It is the credit worthiness of the buyer that led financer to give these offers to the vendor. So now financer will release money and payment to vendor within 48 hours. Vendor is happy. He has got the bill amount. He has paid some small interest and his duties are over. Now the transaction between the financer and the buyer will happen. So buyer has already been opened one escrow account with the REDS platform, wherein he has to finance that money on the due date. The date which is mentioned and accepted by the buyer during the bill acceptance, that is the due date for the financer. And the buyer, say in this case as GAIL Limited, has to honor their due date and release the payment in that escrow account. So financer will withdraw the money from the escrow account. I hope I'm not that fast. I'm trying to explain it a bit. Let's understand the advantages of trades now. When we have gone through the proper how invoices being uploaded, how this is, the advantages are very apparent. For the vendors or the sellers who are MSMEs here, what they have got is the quick payment of invoices, which they would have got after 30 days or would have got after 45 days. They have got it quickly with a small payment of interest. Then there is no loan liability in the books. They have paid the interest and they have got the bill. So there is no loan liability per se. There is no follow-up for the payments. They don't need to go to buyer and follow them up to tell them, yes, my invoices are still pending. We have submitted it since long. So there is no physical movement. There is no follow-up things. And there is no visiting of banks for funds. So many times the sellers has come across some such situations wherein they don't have any finance for the next purchase sale. So this is the best idea by RBI to promote MSME vendors, that they can finance themselves by paying a small rate of interest, which is also paperless work. They don't need to go again and again, submit their returns, submit their papers to the platform. For corporates and buyers, this Threads platform is basically helping them to track their cash flows, that which date, which amount they are supposed to pay. And the due dates are very firmed up, and there is no lagging between the, like once it is being accepted, it is being freezed. It also ensures that payment cycles are smooth and error-free. And the corporates who are registered on the Threads and they're promoting themselves like we are paying our MSME vendors through Threads, they are really getting the competitive rates and the vendor satisfaction. This particular transactions may take some time, may take small amount of paperwork initially for registering and all, but the transparency that this transactions give is really admirable. Here, the MSME vendors, full details like which MSME vendors are getting what payment in real-time basis, where the invoices are stuck. Actually, MSME vendors sometimes claim that we have submitted, but they have not accepted. So all these transactions are very smooth and error-free between the buyers and the sellers. For financiers, whoever registered with this platform as a financiers, they got an access to the broader markets. Their publicity, their advertisements, it's already been through this transactions, and in every vendor's books, you can actually see that how many financiers are involved in this. When you check on the online platforms of Thread, there are only 3 online platforms for Threads. Could be limited vendors and sellers registered. There are limited buyers who has actually taken care of their vendors by registering on this. But there are large number of financiers who are available on this, because financiers are really getting very good approach by having huge companies involving this. When a GAIL India Limited, or big companies, PSUs or government agencies who are involved in this, their credit worthiness need not to be checked only. So financiers are quite comfortable in this instrument discounting, and their operational costs are also reduced. Their marketing strategy needs not to be applied here. They are getting competitive rates also. Like each of the financiers will get enough time and enough platforms to approach to the vendors and the sellers. So what are the features of Threads? So quite a long discussion we had. In this, we are already pointed out what is the Threads features. Number 1, MSME sellers, corporate buyers, and the banks are all connected through the same platform. So all these can see each other's transaction. They can understand what is the ambiguities in the MSME bills that they are not able to process. They can understand why the corporate buyers are actually not accepting the MSME bills. And there are banks who can understand and which are the financiers can see the transactions between the corporate buyers and the MSMEs. They have complete trail of the transactions online. They don't need to do paperwork. Once all the 3, buyer, seller, and financiers are registered, they need not to do any paperwork further. So quickly the funds are getting released. There are standardized process for continuous data flow. These standardized processes are already being monitored and set by RBI for the benefit of all the 3. The discount rates which are coming for financing are competitive. Each financiers are giving them benefit, and they have actually lowered down the interest rates on the platform as compared to the actual market. Then within 24 to 72 hours of time, basically it is not 72 hours, within 48 hours, they will have an access of the working capital. This 48 hours is being followed by all the 3 platforms. With this capital funding, there is no collateral required, and you can get access of the working capital and unpaid invoices which all been posted to the buyer. No physical movement, no follow-ups, nothing is required. Then this cash cycles are shorter, quick access to working capital and the business finance cycles. This whole transaction is off the balance sheet. M1 exchange or any other exchange provides a collateral-free bill discounting, and there is no negative influence on your financial statements. Business growth and in expansions are also advantageous as you have the quick access liquid cash with you. Along with this, before I touch upon some important points of threats, I would also like to touch upon some drawbacks of threats. Basically, our topic is on advantages and its operations, but I would certainly like to mention some drawbacks due to which the threats is not that popular. Since 2014, which has in which it has been placed, and RBI has already been given license to such platforms, such good companies like RXIL, Axis Bank. Still, we are not getting much of the vendors and buyers registered on the platform. So what are the drawbacks of threat? The first and foremost drawback for this threats platform is the identity. It gives it actually MSME vendors and the buyers actually get exposed of their identities on this platform. The whole trail of who is my buyer, where are we sourcing our raw materials, what is the rates we are getting on this is all recorded on the threats platform. Although the confidentiality clause is always there, but still none of the buyers, none of the big organizations promotes such kind of exposure for as far as the raw materials and these are concerned, goods are concerned. So identity of MSME suppliers are a source of big concern for the large corporations. That is the reason that large firms are very hesitant to file invoices online. Also, this trade receivables e-discounting system has imposed an interest rate on the MSMEs. So for some time, whenever these interest rates are not very competitive, and by looking at the transactions due dates, like once this has been accepted at the materials being accepted at the buyer's place, already the invoice date is shifted to 1 week later. And once it is being accepted on the platform by the buyer, again, a tenor of 5 or 7 days are being given for acceptance. So whenever we have a, say, credit period of 30 days with the MSMEs vendors, this 15 to 18 days are already been passed by the time the financer comes into picture. So for discounting for only 12 days or 10 days may not be beneficial for the MSME. That is the another reason that this threads platform has not yet become so popular. The third reason for not being such popularity is the trade system is a very transparent system. And after having the MSME Act in place, the suppliers settling time of invoices, which could be 30 days or which could be 40 more than 45 days, has to be restricted as per MSME Act also. They have to give the declaration, they have to disclose each and every transaction with the reasons, and they have to check on the period of credit time, which should not exceed 45 days. So all these problems, all these teething problems, which has started with this registration fees and all, has actually taken a big jump when it comes to the exposure of the transactions. So I would not say that buyers are really not registering. As far as government is concerned, they want to protect MSME's interest, and they are promoting this in especially all the government companies, all the PSU, central governments, and they are asking each and every company to register here for showing them more and more interest, more and more benefits. And this MSME's working capital benefits, that RBI is trying to promote this platform very much. But still, there are many organizations who are also warning their MSME vendors that they will not take the bills on the site, so don't put it on the sites. These are all off the records that buyers and sellers basically has to tuned well to be transparent for the transaction, and on-time payments has to happen. So the important points that I have just summarized here are that trades may undertake some random audits. It takes audits to ensure that the factoring units uploaded on the exchange are authentic, are based on the genuine underlying transactions, and it has involved the sale and purchase of goods and services. The KYC documentation and its process needs to be disclosed to all the stakeholders by trades. So as it requires confirmation of the banker, of the MSME seller, as it requires KYC documentation should be synchronized with the documentation of the bankers, and verifications are done by the banks in adherence to the extent regulatory requirements. There would be one-time agreement which is drawn up between the participants on the trades, but there are some annual charges which is being charged by the platforms for the registration annually. So the settlement process the settlement process between the financer and the MSMEs are only to the extent of the accepted bids, because here the creditworthiness of the credit risk of this transaction is shifting to the corporations and the buyers. So only if the bids has been accepted, then only the settlement process, then only this discounting process happens between the financer and the MSME. So friends, this invoice discounting, let us touch a bit upon this invoice discounting. The trades has actually made it easier to discount both the invoices and the bill of exchange. This invoice discounting is happening between the buyers and the vendors and the financiers. Whenever this invoice discounting is happening, the outstanding invoices are properly being checked by the buyer, accepted by the buyer, and sometimes the buyer themselves give them the interest rate that if they want the early payment from the buyers offer them the early payment discounts. So early payment discounts are not being exercised as a transaction between the seller and the buyer on the platform. The buyer has to register as a financer separately and then give this offer to the vendor as to discount the bill with the early payments. Here the early payment discount comes in the form of, say 30 days is the credit period, and if you want the bill within 20 days, there would be some nominal charges which will be charged by buyer, and they can give the payment upfront. So this provision is not there in the TREADS platform. For early payment discounts, for early payments by the buyer, they have to register themselves buyer as well as the financiers. Invoice discounted can also be thought of as a series of short-term businesses loans backed by the invoices. To put it in the another way, the lender is aware that you owe them the money and is willing to lend you the majority of it before your customers pays it to you. So if your timing between the customer payment and the financer payment is longer, the real benefits is passing out to MSME. But the timing wherein the acceptances, wherein the intentions are coming on the platforms, it becomes shorter, then this waiting time of short period will not be a benefit to the MSMEs. So this MSME, this TREADS platform has come up only after the MSME Act being placed properly, and TREADS platform are actually being a good benefit to the MSME vendors. Having registered as MSME, already the Act protects their interest. But once you are registered with TREADS as a vendor, as a MSME vendor, it protects your working capital needs as well. So friends, here I sum up my presentation. I hope I have not taken too much of your time. Do there any question answers regarding this?
Good evening, all of you. Do you have any questions regarding this? We'll be waiting for a few seconds for the questions and then we'll go for the vote of hands. Okay. One question is raised by the participant.
So I just read the questions.
Hello,
for the
everyone.
Hello.
Hello, ma'am.
Hello.
Hello, ma'am.
Yes. So, Priyanka, yes. Hope the session went well. I wanted to come join in the beginning, but I could not. So I thought I just say hello to everyone. For today's Sky High Symposium, we had very good, excellent speakers, CA Priyanka Agarwal, as well as another speaker for company law. And the topic was excellent, innovative. What are the threats? And we were discussing, Priyanka and me, this will be really very useful to all the members. So thank you, Priyanka, for being there as a speaker. And I also want to share, I don't know whether in the beginning it has been shared while sharing the profile. She has got the best award, best performance award in all the public sector units. So as a member, I feel so much proud as a women fraternity also to achieve this award among so many people who are working in PSU, so many members, so many people. It's a really a proud and privilege for us as an institute also, and women and young members excellence committee also. So heartiest congratulations, Priyanka, for your achievements, and we wish you from WIMEC and ICI, we wish you a very, very great success in your future career path. And the session was really excellent.
Thank you so much, ma'am.
I always
For your appreciation. Thank you for calling me as a speaker here.
yes, and I always
there
tell
are questions.
speakers question answers. I am not, don't want to disturb further, but stay connected every Wednesday, 4 to 6, our Sky High Symposium. We have completed 56 episodes so far.
Oh.
So please continue, Krisha, and my congrats to Meera, Madhvi, and entire team of WIMEC. Please carry on.
Thank you, ma'am.
Thank you so much, ma'am. The question which has been asked here is already been answered, and it has been addressed in my slides also. So I just want to quickly answer him, Mr. K. Han. It's why MSME are not showing interest to trades, and how can a CA firm can be registered as a financer. So there are certain guidelines given by RBI for CA firms or any other interested parties who can register as a financer. So majorly NBFCs have been promoted to be registered as financiers here. And this PDF is available on the site. There is one site which is called Udyam portal. And the trades platform also has their separate sites. RBI is also giving link to the trades platform sites, wherein the financiers, buyers, sellers are welcomed to be registered. And why MSME are not showing interest to trades? That is because the MSME has to do business in this corporate world. Sometimes the buyers themselves are not interested, and they are warning MSMEs that you don't need to register therein. We will give you early payment discount directly. We will directly deal, and we don't want the trades platform to be on our screens, on our linked to the payments. And the buyers actually getting this difficult on trades platform because they have to expose to the confidentiality of the transactions. They have to expose to the accounting transaction if they are linking the platform to their say SAP system or Oracle system, whatever they're using. So that is the main reason. And Preeti ma'am, thank you so much for being there and supporting us. And I really appreciate this seminar, this 57th WYMC seminar, and thank you so much for inviting me here as a speaker. Thank you.
Any other questions? Okay, so who?
Excuse me, Krishna. Priyanka
Yeah.
ma'am, on behalf of a participant, I just wanted to ask you two questions. First one is, when we register on trades, so do we have any number granted which we are required to print on our bills or any further communication?
While we register on trades, we don't need to print anything on the invoice per se.
So after getting registered at trades, whenever
Yeah.
afterwards, whether we are required to give that registration number on our bills or invoices or any form?
No. See, this TREADS platform is between the buyer and the seller first. So whenever a seller or MSME vendor is registered on the TREADS platform, they has to intimate it to the buyer that we are already registered. Okay. They don't need to print anything on the invoices. They just has to tell them that we are already being registered on TREADS. So kindly consider our invoices. Now, each of the participants on TREADS, like financer, buyer, and seller, has their own login IDs and pop-up IDs with them. So whenever an invoice is being registered by seller, invoice is being registered by seller on TREADS, uploaded on by seller, the buyer and financer will get a pop-up.
Okay.
So once the buyer get a pop-up, they will automatically get to know, yes, this is my vendor. Yes, I have received this goods, and they have to give the acceptance.
Okay. And the second question is whether any kind of litigation has been you have experienced after settlement of the bill or discounting and after all that.
See, I have been working for a industry, and in our industry, in RCF Limited, we have been the first PSU to implement the TREADS system, and till now we have been doing many transactions on TREADS, and till now we haven't got any such litigation with any of the MSME vendors.
Okay, thank you, ma'am.
Okay. So as all good things come to an end in life, so is the seminar. On behalf of the Women and Young Members Excellence Committee, I, C. Krisha Jain, propose vote of thanks to those who have directly and indirectly contributed to this seminar organized by our committee. At the outset, I thank our speakers, C.S. Lavina Parekh and C.A. Priyanka Agarwal. We are really enlightened with your knowledge and presence. We are thankful to our Honorable Chairperson and Vice Chairperson, C.A. Preeti Savla and C.A. Abhay Chajjar, for their enthusiastic support. A special thanks to the organizing committee for their influencing support and coordination. A heartfelt thanks to our participants for their presence. With these warm words and kind message, we move to the end of today's seminar, and the question and answer round is also over. So if any other few questions are there, we have last 3 minutes. Anyone? Any questions? Okay, so I hope this is the end of the seminar. Thank you so much, everyone.
Thank you.